Today we're analyzing gold step by step starting from the weekly time frame and zooming all the way down to the 5-minute chart. Along the way, we'll mark key levels, identify potential trade setups, and explore how to align higher and lower time frame strategies. Stick around to learn how I managed to scalp these trades. Let's dive in. Gold analysis. Let's start with the weekly time frame, where we identify the key levels of market structure that price has recently reacted to. These levels are like signposts on the road, helping us anticipate where price might stall, reverse, or gather momentum. First, we have the historical top. This level is a significant resistance point where price was recently rejected. Think of it as a no-entry sign for price. Each attempt to break through has been firmly denied. Next, we notice the support resistance level just below. This one has played a dual role, acting as resistance at times to keep price down, and then flipping to support to push it back up. It's a versatile level, and price tends to react strongly when it revisits this area. Lastly, there's another key level lower down, which has served as resistance multiple times. It's a quieter level but still important, as it consistently stops price in its tracks. From the weekly time frame, these are the most relevant levels we need to mark. They represent areas with a high probability of price reacting when it taps into them. By keeping our analysis simple and focused, we ensure we're working with clear, actionable zones. Step 2. Refining and adding key levels. Now that we've identified our key levels on the weekly time frame, it's time to zoom into the daily chart for a closer look. This is where we refine our analysis and add more detail. The first task on the daily time frame is to fine-tune the weekly levels. We want to adjust them slightly to align with the greatest number of touches from a daily perspective. This ensures our levels are as accurate as possible across both time frames. Next, we mark the daily key levels of market structure. To keep things organized, we'll use a different color for these levels. Because when we zoom into the lower time frames, it's important to clearly distinguish between weekly and daily levels. Remember, the higher the time frame, the greater the importance of a level, so we don't want to mix them up. 3 tips for drawing levels. When identifying levels of market structure, keep these 3 tips in mind. Maximize touches. Draw levels where you can get the greatest number of touches, as these are the strongest and most reliable zones. Focus on candle bodies. While wicks matter, drawing levels from the bodies of candles takes priority, as they reflect the most traded price zones. Treat levels as areas. Think of these levels as zones or areas of interest, not rigid lines. Price rarely respects a single pixel-perfect line, so allow for a bit of flexibility. And that's it for the daily time frame. We've adjusted our weekly levels for precision and added new daily levels to capture additional market structure. With these key levels in place, we're now set to dive into the lower time frames with a clear and organized chart. Let's continue our analysis as we zoom into the lower time frames, starting with the 4-hour chart. On the 4-hour chart, we now see both our weekly and daily levels clearly plotted. These levels are critical because they act as strong support or resistance zones when price reaches them. Here's how we use these levels on this time frame. When price breaks a level to the upside or downside, it signals whether supply sellers or demand buyers is in control. This gives us clues about whether price is likely to continue to the next level. Setting higher time frame targets. These levels also serve as our higher time frame targets for trade setups. For example, if price is approaching a daily level, we're prepared for potential reversals or continuations based on how price reacts there. Currently, price is trading at a daily key level. We can already spot a candlestick rejection at this zone, indicating a potential loss of momentum. This rejection suggests that demand may be overtaking supply, which could push price to the downside. However, let's not jump to conclusions. If price breaks above this level, it would signal strong bullish momentum, and we'd shift our focus to buying opportunities. Dropping down to the 1-hour chart, we notice a short-term uptrend forming. Price is creating higher highs and higher lows, steadily climbing upward. This signals bullish control in the short term, but we need more confirmation before making decisions. Zooming into the 15-minute chart, things get more interesting. Here, price has already taken out liquidity resting above the equal highs, a common move to gather momentum. After that, price pushed to the downside, forming a trend within a larger trend. At the moment, Price is trading within the smaller bullish trend inside the larger bearish structure. If price breaks below the short-term trend, it could present an excellent selling opportunity. Finally, let's analyze the 5-minute chart for scalping opportunities. While preparing this video, I spotted a quick move to the downside and managed to capitalize on it. I placed a sell order here, aiming to scalp the small move downward. When scalping, the key is to get in and out quickly. Remember, scalping is all about seizing small, precise moves without holding trades for too long. My exit was around this level, which had acted as a strong resistance zone previously. Sure enough, when price tapped into this area again, it rejected and reversed back to the upside. Now we wait. The market is sitting at a critical point, and we're looking for one of two things: a break below the current short-term bullish trend, signaling a clear opportunity to sell; a break above the key resistance level, confirming bullish momentum and opening up buying opportunities. Patience is key here. Let the market show its hand before making your move. And that's how we break down gold across multiple time frames to identify opportunities. Whether you're a swing trader, day trader, or scalper, understanding the relationship between time frames is essential for better decision-making. If you found this breakdown helpful, don't forget to like the video and subscribe for more in-depth market analysis. Let me know in the comments how you approach multi-time frame analysis, and I'll catch you in the next video.